CEOs of public companies. Let's talk about raising capital and specifically value-added capital. Why you should only raise value-added capital? What is it? How do you get it? Okay, first of all, let's talk about what you're not getting right now. You're not getting value-added capital. I can almost guarantee you that because most investment banks in the US, in Canada, their goal, they're basically prostitutes. Okay, let's just call it a spade. Their goal is to close the deal as quick as possible, as easily as possible, get as much commission as possible. Okay, I don't blame them. And what that means is they're going to put you into situations where essentially they're putting in their hedge fund accounts into your deal, whose goal is almost always to just capture a quick spread between the discount of where they buy your stock, get the warrant, whatever. These guys are just trying to make a quick spread. They don't care about your company. They know nothing about your business. They do not care about you. Believe me. How do I know this? When you talk to these people, okay, if you ever talk to them, you'll notice they never ask any deep questions about the fundamentals. Why is that? Because they don't care. They're not going to own your stock for longer than maybe a couple of hours. If they're shorting your stock before they even close the deal, right? So you don't want those people in your account. What you do want is value add. Now, what is a value added investor? A value added investor, I'm going to give you the three qualities. They're actually going to bring more value to you than the money that they put into your deal. Okay. That's right. So if they're putting $1 million, they're probably going to add $5 million in value to your deal. How is that possible? Here's how. And by the way, this is what we do. This is what Wall Street Reporter does for our clients is we bring you value added investors. We do it for two reasons. One is it's good it funds the growth of our clients. And it enables everybody to be successful because I don't want you raising money from scumbags who are going to destroy your stock. And that's what you're going to get if you don't follow proper advice. Now, let's talk about the three qualities of a value-added investor. Number one is they bring a sphere of influence. Okay. These people have a following. Okay. They have their own following, whether it's on social media, whether it's in general other investors follow them into stocks and maybe they're retail investors, right? We've had this in a couple of situations. So if these people invest in your stock, they're going to be talking about it. They're going to be bragging about your company. It's grandparents talking about their grandchildren. They're going to be talking about your company at different conferences. They're going to be constantly talking you up as long as you're doing your job, basically, which is performing, etc. Because you do not want to embarrass these guys. That's the one thing you do not want to do. You don't want to make them look bad by performing. But yeah, they're going to be basically you're getting free promotion. You're getting free promotion when you hire these guys. When you take their money, this is better, not hire them. When you take their money, they're essentially, not only are you getting their money, but they're going to be working to promote your stock. They're going to be putting out tweets. They're going to be writing posts about your company, all that stuff. That's number one. So that brings in value. And they're long term. They're not in to flip it. They're in it to make they're long term. They want to make 10x. They want to make 10x. The other thing that they have is they actually have networks. Okay. They actually have networks. Let's say you're in a certain field or whatever it is. A lot of times these investors the reason why they're investing in your stock is because they already have a network of high-level, C-level contacts in that sector, and they can help you. They can bring you potential M&A situations. They can bring you deals. They can bring you contracts, all sorts of stuff, right? So basically, they're going to be bringing you business, okay? So they could be increasing your business that way. And number three is, again, these people can also give you some really great advice. So they're advisors, okay? A lot of them will have domain expertise in your sector. That's probably one of the reasons why they're investing. Again, big difference between one of these kind of like arbitrage type hedge funds, these pipe funds that are strictly trying to capture a discount. They don't care about your fundamentals of the business. Whereas these value add investors, they're investing in your stock because they have domain expertise. They understand what you're doing And they're investing for the long term. They want to make 10 times their money, basically, or more, right? So they're going to do whatever they can to basically push your stock as high as possible. How? By introducing you to potential clients, to potential customers for your business, to potential M&A opportunities. And again, advice. If they have domain expertise, they can give you some incredible advice. Again, especially a lot of guys may have been in your business for many years, right? I don't need to go into details. That is what I call a value added investor. Now, the opposite of that is, talked about it before, which is these hedge funds all they want to do is capture a quick spread, whether it's 5%, 20%, whatever it is, and they're on to the next deal. They don't care about you. By the way, what's going to happen is once you close one of those deals where you're selling your shares at a discount, your stock is going to be sidelined for 6 months, maybe. Okay. You're going to be out of commission, basically. So that could really put a crimp in the growth of your business. It's not a good situation. Whereas a value added investor, if one of these value added investors comes in, even if they come in at a big discount, your stock could actually do quite well. And again, that's what we do at Wall Street Reporter. That's our specialty, is match up quality companies that have a real serious growth story with these types of value added investors that can not only give you capital, but something much more valuable than capital. Anyway, look, if you're looking for that type of situation, get in touch, and perhaps you could be our next 10x, 10 bagger success story. Look, no, I shouldn't say we've raised. We're not investment bankers, but our clients have raised over $2 billion in the last couple of years as a direct result. Okay, that's right, as a direct result of the increased market support and liquidity that came about because of Wall Street Reporter's marketing programs. Okay, do you understand what I'm saying? Do you get what I'm saying? What I'm saying is, because Wall Street Reporter put these stocks on the map, we got the massive investor attention, exposure to the investor community, put them on the radar. All of a sudden, the stock starts trading hundreds of thousands, millions of shares a day. So there's deep volume, deep liquidity. Stock starts going up. That makes it attractive for investors to come in and buy. Now, just so you know, the $2 billion we talked about, most of that was not value-added investors. Look, I'm always willing to make introductions for valued clients. Some CEOs see value in my advice, some don't. Some are desperados. They want to close the deal quickly. And it is what it is. But the bottom line is, yes, when you're on the Wall Street Reporter platform, you will be able to raise capital. It's really very simple. One thing that you do want to look for is, again, value-added capital. So if you want the value-added capital, get in touch. Here's to your 100x success.